So hi everybody, I hope you enjoyed yesterday. I hope you managed to turn up live. I know many of you did because we had so many people. A few of you may have caught up on the Facebook Live. It was a great session, and thank you so much for all the comments that I got. In fact, let me just, if I just switch back again, here's some of the comments that some of you put into the Facebook group, which thank you so much for that. I don't know what the first name is, but G said, loved it. Christy Jolly said, awesome. Joe Matthews really enjoyed it. Ashley Rivera, can't wait for tomorrow. Well, Ashley, we're here now. It is tomorrow. So, and she says, I want more in capital letters. Liz Little said it was great. To Sean Glaze, it was awesome. Great session from Jeffrey Williams. Kathleen Morgan, very informative. Lynn Talbot loved it. Marlene said awesome. Michelle caught the last 45 minutes. So hopefully, Michelle, you've been trying to make this jump to value pricing for 8 years, hoping this is the push I need. I hope it is for you, Michelle, and hopefully you caught up on the bits that you missed. A few more. Rajmi, thank you for your comments in the Facebook group. Thank you, Brittany Tam, as well. I know some of you have made a start as well, which is cool. Rashmi said as well there, one question, what's the difference between the Bookkeepers Pricing Academy and the Value Pricing Academy? I may answer that later on when we get to the Q&A session. So I want to get into content fast today, so I'll come back to that later. Shirley Winship, thank you, Shirley, said it was great. A lovely comment from, is that Irinka? I think, loved session 1 and also shared some of most valuable takeaways. Tony Marie Catchpaw, phenomenal. Thank you, Tony Marie. We have great presentation from Bamidele. Amanda Kerr said today's session was great. That was yesterday's. Carol, one of my favorite people from Canada, said awesome session. So thank you, Carol. Carol Kosachuk. It was great from Jeannie Black, and so excited for tomorrow from Arwen. Made some new connections too, so I guess that's via the chat box. So use the chat box to connect with each other, please do, and use the Facebook group to do exactly that. Karenja said great feedback as well, and Miranda too. And also, I said to you yesterday, please put comments in the chat box, share things that are working for you. I don't monitor the chat box now we've started because it's gone crazy. It always does. You want to instead use the Q&A box to ask me questions for later. But we always monitor, my team monitor the chat box, Sarah and Emily, and I read the comments as well. And Carla Newman, I don't know if Carla's there, she said this in the chat box. She said, with listening to Mark for the past year, I moved a client from 36,000 a year to 106,000 a year without any pushback. All about confidence, listening to the pain points and communicating the value. So that was so impressive that my team, or Sarah, reached out to Carla and said, could we do an interview with you? Could I interview Carla and then share that success story? What did Carla do to get from 36,000 to 106? I would love to know, and perhaps you would too. So watch this space. We will catch up with Carla, and I will get that video to you and share that as soon as I can. Okay, some quick announcements before we start. So to remind you that this is session number 2, as you can guess, out of 3. I hope you made it to yesterday, or at least caught up with the recording, because I'm not giving a recap of yesterday. We had so much content yesterday. Today, we're going to build on that. Today, we're going to go deeper on some of the biggest challenges. Yesterday, we looked at what we did yesterday was look at the challenges like confidence, about the hourly billing trap, the hourly mentality. We looked at how to create packages, and some people said some wonderful things about that part of the session. Today, we're going to move into more of the how to come up with the price. Of course, there is so much stuff I could share with you, and over these 3 days, we'll probably do about 4 to 6 hours. Yesterday, I think by the time we finished the questions and answers, we were just over 2 hours. So you'll get about a day's worth of training over these 3 days. But unfortunately, we still only scratch the surface, because there is so much that I could teach you with value pricing, even value pricing bookkeeping services, which is our theme for this session. So as you may remember, we are launching on Monday at 11 o'clock Eastern Standard Time, a 6-month training program where we go even deeper still with resources, software, and so on to help you master value pricing bookkeeping. And I'll tell you more about that later. Of course, what I would love to know via the chat box is if yesterday or in the last 24 hours, if you're one of the people that have enrolled already, if you've enrolled for either How to Price Bookkeeping, the 6-month training, or even the Bookkeepers Pricing Academy, please tell me in the chat box and tell me, what are you most excited about? What are you most excited about over the next few months as we work together? I'd love to know. I know many people have joined already yesterday. Let me know who you are. As I say, we monitor the chat box, and tell me, why did you join? What are you excited about with the Academy or the How to Price Bookkeeping course? Now, of course, I said yesterday, there's no such thing as a magic button. I love teaching pricing because some of the results, like Carla Newman, who she shared yesterday, that one on the screen just now, people are doing some amazing things with their pricing. And that's what drives me to do more of this, because I'm an accountant, a chartered accountant. As I said yesterday, I love this profession and I want to change lives. I want to help you get better results from your pricing. Of course, there's no magic button. It won't happen overnight. Value pricing is a journey, not a destination. I've been teaching this for 20 years and I'm still learning. I'm still learning all the time. But what I do know is when you follow the frameworks, you will get results. Yesterday, I think it was in the Facebook, one of those comments I shared just now, someone said in there that the menu pricing that I taught yesterday, they said, I've heard you teach that before. I've done it. It works. I've had several people choose the most expensive option. It works. This stuff works. You just have to follow the frameworks, follow the stuff that I teach. It will work. Will it work every single time with every single client? No, of course it won't. But most of the time, as you build your confidence and get better, you will get better and better results. Now, yesterday I also asked this rhetorical question, and that is, there are two types of people I tend to find who come to my sessions, and they are either the note takers, the people that sit, learn, listen, make notes. And I applaud that because we have to keep investing in our knowledge. But the people that change the world, the people that get huge results, are the action takers, the people who go away and do stuff, like Carla Newman. And so my question for you is, are you a note taker or are you an action taker? Do you go and do stuff? Do you make stuff happen? Do you come to things like webinars, listen, and then take something away and put it into place and do it? Some of you yesterday in the Facebook group told me that you've already started. You've started to map out your packages. You start to think that through. And I applaud you for taking action. Some of you might not have started yet. Are you a note taker or an action taker? Now, this is session number 2. I hope you're going to be here for the whole duration of it. And I hope that you'll make it to tomorrow as well. But of course, remember that we are recording them as well. Those recordings will be available to you in the Facebook group. We're currently going through Facebook Live as well. You may be listening to me through Facebook Live. Personally, I prefer Zoom. It's a better experience. You can interact through the Q&A box. But if you're whichever, thank you for being live. And then, of course, Facebook Live creates the recordings and we will make them available to you. The recordings are available to you until Monday. You've got till the end of the weekend to catch up if you miss any sessions, and then we'll take the recordings down. We do that because, as I said yesterday, is the problem with recordings is when you know there are recordings, it's tempting not to come live because you'll catch up another day. But another day never happens because life gets in the way, clients get in the way, we get too busy, and we have all these great intentions of doing the learning, and it doesn't always happen. So we're taking them down on Monday. If you don't make it to the live sessions, you need to block out some time to watch the recordings. But I know that you are here live right now, so well done. Best to come live, get them in your calendar, because then you can ask me questions, which many of you have started already. So we'll do that. Now, with questions, we'll answer questions at the end, although my team, Sarah and Emily, may answer some of your questions if it's an easy, simple answer. But at the end, I will answer as many questions as I can. I think yesterday we spent about 50 minutes on the Q&A, and we didn't get through all of them because there were hundreds of questions. But again, today, I will do my best to answer as many as I possibly can. But here's a request. Please, please, when you type in a question, use the Q&A box, not the chat box. Use the Q&A box and keep your questions succinct. Keep them to a maximum of 3 lines, 1 or 2 sentences. And the reason for that is when I'm live like this, I have so many questions to answer. I want to answer questions as quickly as possible to really help you with as many different areas as possible. The trouble is when you get a long question that's perhaps 5 or 6 questions, what you tend to find, what I find is that firstly, everyone's got to listen to that question. And very often, if it's a long question, it ends up being multiple questions. And as I'm formulating the answer to the first part of it, then something else kicks in. And by the time I've thought of the answer to the last bit, I've forgotten the first bit. So keep questions short. Try and articulate them in 1-2 sentences maximum. If Sarah gets long questions in the Q&A box, she probably won't pass them on to me. Okay, so keep questions short so I can answer as many as possible. And last but not least, do make sure you have the workbook. Okay, it's the same one as yesterday. It's the same one for all 3 days. If you've got it, that's great. If you haven't got it, you can get it from the Facebook group. You go to on the let me think, on the left-hand side, one of the items says units. Go to units, you'll find the download to this. Also, I will ask Sarah or Emily to put a link to it in the chat box. So I know there's hundreds of comments in the chat box, but somewhere will be a link to this. When you click on the link, you can print it out if you want to write on it, but Emily designed it. It's designed so that the bits where you can fill in the blanks, you can type into it. So save some trees, save paper. Okay, so I think that's kind of all the announcements that I need to go through. So what are we going to do today? Yesterday, we looked at some of the challenges: confidence, lack of knowledge, creating packages, the hourly mindset trap. Today, we've got a lot of information today. Today, we go much deeper on some of the comments, the things that you tell me are your biggest challenges. We're going to look at 3 core challenges today. They are pricing too low, uncertainty over scope when it comes to pricing bookkeeping, and calculating a price. There are challenges. And the problem with all these challenges with, for example, pricing too low, is we end up finding that we work too flipping hard just trying to make ends meet. And so we should make sure that we get our pricing right. Because when we price better, we can start to have a better life. We can start to free up time. We can have a better work-life balance. We can make more money. Most of our problems in our practices right now are down to the way that we price. We need to fix that. Okay, I think I have something. Yes, a quick thing just to pick up on yesterday. So I said to you yesterday that confidence is a big issue. And that's why I share success stories like Carla's, because when you see other people just like you taking action, doing this stuff, I share those stories with you because I want you to believe that you can do this as well. You can achieve this. It might not happen overnight, but if you keep working at this, if you go on the journey, if you keep learning, if you keep applying the frameworks and doing things, you will get these results. So one of the things I shared with you yesterday was Lana Hill, who has been doing some amazing things in her firm. I started working with Lana when she did the first version of my How to Price Bookkeeping course, which was in May of last year. And just 14 months on, despite some personal challenges, despite COVID-19, the results she's getting are extraordinary. And I said to you yesterday that I interviewed her, I think it was a week ago, because I wanted to find out more and learn. And so she kindly we did that interview. Just so you know, we posted that yesterday, I think, or today. Yes, depending on what time zone you're in, of course. But in the last 24 hours, we've put that up onto the Facebook group. You'll see it. It looks a little bit like what you can see on the screen right now. So if you've not seen it yet, it's about half an hour long. I encourage you to find some time to watch the interview with Lana, because she just shared so much. She was so kind, so generous with sharing the things that she's done, the challenges she had, what she's been doing over the last 12 months, and some of the results. And she wrapped up with sharing some of her top tips for you on how to get great results with pricing your bookkeeping services. So I strongly recommend you catch up with that particular video. You'll learn so much. Okay, let me just turn that back off for a second. So let's deal with the first of the challenges, which is pricing too low. And actually, I will put this back on again, because in the Facebook group about a month ago, I asked people in the group, I said, tell me, when I run the pricing bookkeeping masterclass, what are some of your biggest challenges? What are the things that you want to learn? Because I want to make sure that in these 3 days, I address the main challenges. And one of the things that kept coming up over and over again was problems with coming up with the price. So Marcy Collins Tyler said, underpricing is the biggest pain. Linda said, figuring out pricing so I'm not leaving money on the table and communicating that it's not my time they're paying me for, but my experience and knowledge. And that's a big issue. We are leaving so much money on the table because we are too cheap. And so today we're going to really focus on that. But also Linda said, communicating that it's not my time that they're paying for. We're going to look at that a bit more tomorrow with the challenge of how do we communicate value. Sheila Brownlow from the UK, she said, as well as confidence, it was tips on what a client would consider to be added value and getting them to pay a fair price for it. I need help to build the confidence in myself and my team that we are worth more. Building systems so that the team are trained to recognize scope creep and empowered to have the discussion with clients as I can't do it all myself. So again, pricing issues, scope creep, we're going to deal with all of that today, Sheila, and answer those. Is it Eve? Eve said, a question really, should I be charging hourly, flat rates, per employee or payroll staff numbers, percentage of clients' revenue? I'm going to answer that, Eve, in this session. How do we come up with pricing? The answer to that is the first one, definitely not. You should not be pricing hourly. We covered that yesterday. I also talked about flat rates, that it's not flat rates or fixed pricing is not value pricing, but it's a great place to start if you're on this journey. And I have a graphic to show you shortly, which will illustrate what I mean by that. Trudy's bookkeeping. Trudy says, I'd be interested in, this is my biggest problem, is coming up with a figure that will be acceptable to my clients. And Andrew McCormick said, the main issue I have is understanding just how much. Let me just check. Am I? Yeah. I'm not actually on that screen. Sorry, forgive me. Let me just put that one back. Who is it? Andrea said, yeah, the main issue is I have understanding of how much there is to do. One client, for example, said, we'll do all the bookkeeping. All we need from you is to do the quarterly bank reconciliations. And then she went on to say, when I got there, half the bank entries were missing. So I was then digging around for supplier statements and entering in regular DD amounts. What should have taken an hour, tops ended up taking 3 hours. So some form of questions, checklist of questions to ask clients about their system would really help. And that was similar to a question that we got yesterday, where someone asked about, if the client wants to do some of the work themselves, then that creates some challenges. So they're the sorts of things we're going to deal with. I'm going to try and solve all of those issues today. Okay, I did say I've got a graphic for you. Let's now get to it. I said to you yesterday that value pricing is a journey. It's a journey on a destination because there's so much to learn. There is no way, if you're on hourly billing right now, I can teach you in 3 sessions how to become a master at value pricing, because 20 years on, I still haven't mastered value pricing. There is still so much to learn. It's a new field. There are so many studies being done right now in the world of behavioral economics, price psychology, so many things we're still learning. But it's an exciting journey to be on because, as you have perhaps gathered from some of the success stories, firms that are on this journey are getting incredible results. So I don't try to teach people to move from hourly to value pricing because value pricing is difficult. It's easier. I prefer to teach it in steps, in baby steps. I just want you to take one step at a time, take one step in the journey, and just gradually change the way that you price. So let's imagine right now, if you are in that hourly billing mindset, you're pricing based on the hour, that has to change. We explained why yesterday you have to do that. And so the first thing that you need to do, the first step in the journey, is to move from hourly to fixed pricing. I said yesterday, fixed pricing is not value pricing. At least not the way that most people in this profession are coming up with their fixed prices. Most people, when they do give fixed prices, they think it's value pricing. It's not. It's still a form of cost plus pricing because those fixed prices are generally based upon a best guess at how many hours it might take to do the work. So it's still cost plus pricing. But despite that, fixed pricing is a better way of pricing. The main reason is because it's fairer on the customer. Customers, clients want to know right up front what the price is. We all hate hourly billing. I hate it when I deal with lawyers and I want them to draw up a legal contract, and I say to them, what's it going to cost? And they say, well, my charge out rate is £200 an hour. Okay, great. But my next question as a customer is, but how long will it take? And the answer is always, well, we don't know. We've not done the work yet. But trust us, we're a firm of lawyers and we itemize every 6-minute unit. And when we finish the work, we'll send you an itemized bill listing everything we've done and the time we've taken. I hate that as a customer. I hate it. I want to know what the price is. Also, what happens is, and many clients, and I am exactly the same, many clients subconsciously might be thinking, I bet they make those timesheets up. Now, of course, we never do in the profession, do we? The timesheets are 100% accurate. I'm sure they are in your firm. But whether they're accurate or not, the clients are skeptical. It's a crazy way to price. They want to price up front. We have to do that. And therefore, we have to move from hourly to fixed pricing. That is a great step to take. And on this value pricing journey, arguably, that is actually the hardest step. But once you've done that, once you have a system for giving a fixed price with confidence, knowing that you will make a profit on the work, moving to value pricing becomes a lot easier because you now have a foundation to build on. We can start to build on various techniques. Yesterday, we focused on how to create packages. I call it menu pricing. I often refer to menu pricing as your first step towards value pricing, because once you can give a fixed price, then as you give a fixed price to different packages, we're now starting to become value pricing. It's not pure value pricing at all, but it starts to become value pricing because each individual customer gets to choose the package based on their own perception of the value of the package. If we think about Starbucks, and let me just turn this off for a second. If we think about Starbucks for a minute, they give you 3 choices. If you want to buy a latte, you get the choice of the tall, that's the small one for some bizarre reason, the grande, and the venti, because different customers value the quantity of drink they get differently. Do Starbucks cost plus price those? No, they don't. You will find that they value price them because the margins they make, the profit they make on each one is different. Let me explain why, and you may know this, you may not. A few years ago, I was doing a pricing workshop for Intuit over in the UK down in Exeter. And before I was due to go on stage, not immediately before, but a few hours, I went for a wander into Exeter to clear my head and to go to a Starbucks to grab a coffee. And I had a conversation about the person behind the counter. It was early in the morning. I was the only person in there. And I was curious about, I'm always curious about how people price. And I always look at the menu at Starbucks and about the price points. And I asked them a few questions. And they didn't know all the answers. But one of the things the person behind the counter said, which I thought was really interesting, they said to me, I probably shouldn't tell you this. That got me interested. I probably shouldn't tell you this, but when we make a latte, when we do the venti, we put 3 shots of coffee in. Okay, that's interesting. When we do the grande, the middle one, we put 2 shots of coffee in. Okay. When we do the tall, what do you think they do? 3 shots in the venti, 2 in the middle one. Logically, you might think 1. No, 2 shots. It was 2 shots, 2 shots, and 3 shots. And I got thinking about that. And that's really interesting because what do you believe? What do you think is the most expensive ingredient in a latte? And a little tip for you, it's not the water. Okay, the water is not the most expensive ingredient. And another tip, it's not the milk. What do you think is the most expensive ingredient? And if they put 2 shots of coffee into the small one, 2 into the middle size, and 3 into the top one, where do they make the most profit, the most margin? The middle and top ones. They make the least on the smallest one. If they were cost plus pricing, the proportion of coffee would be proportionate to the price. It's not. Of course it's not. We know that. They're not coming up with a price based on cost. They're coming up with a price based on value. And I'm going to share a concept later called relative pricing, which is really powerful. As we start to move to to menu pricing, you will start to move into the realms of value pricing. At first, of course, the way you may do it is you might cost plus each of the components, but that will be a mistake. And we'll look a bit more about, look into that a bit more in a short while. Okay, let me just quickly flick back to this. So menu pricing is a great place to start, but then there's other things that we can do as part of our journey in the way that we involve the client in the process as part of value pricing. We can start using options, behavior awards, upselling, price psychology, and many other techniques. And I haven't got time to cover all of those in the short time we have together in these 3 days, but today I do want to make it practical and give you, and I'm going to finish today by showing you how you can start to build in all of these more advanced techniques that will get you much higher prices. Okay, so what we want to look at first is on this journey, if you're on hourly right now, your first job is to move to giving a fixed price up front. A fixed price up front. The problem with doing that, and it's what you all told me in the Facebook group, the problem with giving a fixed price for bookkeeping services is this. I don't know how long it's going to take to do the work. I understand that. And the reason we don't know how long it takes to do the work is because that's the scope of the project. The scope of the project determines how much effort we need to put in, how much time we put in. And so if you want to be certain that you'll make a profit, you need to make sure that you properly analyze the scope and have a system that enables you to come up with a price based on the scope. Of course, the difficulty with selling bookkeeping services compared to Starbucks. Starbucks are selling coffee. Coffee is much easier to price because the costs are fairly easy to understand. And so it's easy, very easy to set a price that we know will make us a profit. And we can start then value pricing because we know the costs are here. Our price can be anywhere up here and we make a profit. But in our profession, there are so many variables, so many uncertainties with things like bookkeeping. So we need to start to understand what impacts on the amount of work that we need to do for bookkeeping. And these are what I call the scope factors. I mentioned yesterday about the survey I did a year ago in July of last year, where we looked at a number of questions. One of the things that was in the survey, I asked people to rank what they believe are the most important scope factors when it comes to bookkeeping services. And I want to share with you the top 5. And if you've got the workbook in front of you, you'll probably want to make some notes right now. I'm going to actually put them on the screen if I've got them on the screen. No, I haven't. I will have them any second. Here we go. So these are what the 2,683 people told me are the top scope factors. So the first one, number 1, is the total number of transactions in a month. Which makes sense really, because if you think about it, bookkeeping is essentially data entry. I know it's more than that. We do reconciliations and so on, but a large part of bookkeeping is the data entry. And therefore, the amount of data we have to put in, the number of transactions, determines how much work we've got to do. But there's other things as well. The number of the number of bank accounts make a difference because we have to reconcile those bank accounts. And if we've got a company with 10 bank accounts, there's more work to do than if they had just one. If they're using credit cards, the number of credit cards that they use for their business has an impact because they need reconciling as well. Whether they're registered for sales tax in the UK, VAT, in other countries, GST. And another one, the one you said was number 5, was what accounting system do they use? If they're currently using a system like a spreadsheet system, then it's really hard to do the bookkeeping. But if they're on a cloud accounting system, and particularly your preferred cloud accounting system, so if you're a QBO Pro Advisor and they're using QuickBooks Online, that's going to make your life easier. So those are the top 5 scope factors. There are others, and I'll share some more in a short while, but they are the top 5 that people tell me. Now, based on your experience, you might find there are different scope factors that are more important. But what you need to do, here's the important thing, you need to identify for you, based on your experience of bookkeeping, what are the most important scope factors. And once you've then done that, one of the things you want to do is identify, certainly, what's number 1? What's the most important one? I call this the primary scope factor. The primary scope factor is the thing that has the biggest impact on the amount of work that you have to do. And I would suggest to you, and what the research suggested, is that some sort of variation on number of transactions. It could be total transactions, number of sales invoices a month, number of bank transactions. It's up to you to decide which is best for you, but some kind of number of transactions is the primary scope factor. And then all the others are what I call secondary scope factors. Number of bank accounts, accounting system they're on, do they have credit cards? Those are secondary scope factors. So why is that important? What we now want to do, and this is what I did back at the end of 1999. Remember, I was running my accounting firm. I started in 96, and between 96 and the middle of 1999, for 3 years, just over 3 years, I was time-based billing. I thought that's what you had to do. I'd grown up in the profession, believing I had to keep timesheets and had to bill based on the hour. And it wasn't until I met Ron Baker in 1999 and he told me about value pricing, this light bulb went on and I started to figure out value pricing. And for some of my services, it was relatively straightforward, tax planning, for example. But I was an accounting firm. I didn't do much bookkeeping. My main core service was annual financial statements, or in the UK, we just call it annual accounts. Annual financial statements, annual accounts. And I had to figure out, well, how can I give a fixed price right up front? So I went through a process. And the process that I went through was identifying what did I feel was the most important scope factor. What was the primary scope factor? It wasn't number of transactions, because in this particular case, it's a different service. I had a different one. But then I had other things that impacted on the amount of work. For example, the trading entity. There's more work involved with doing annual financial statements with a corporate than a sole trader, because you've got statutory accounts disclosures and so many other things that you've got to do. So there were many secondary scope factors. What I then did was I took a random sample of about a dozen of my clients, different types of clients. And on a spreadsheet, I listed them. I listed the primary scope factor, and I listed how much did I price them last year, or should I have priced them had I got the pricing right? What should the price be for a client with that particular primary scope factor? And based on that, I did some analysis. And based on that analysis, I then built a piece of software at the end of 1999. It's software that's it's UK specific, that I then made available to UK accounting firms. I don't have that software anymore. I have different software, but that's why I started this journey in my accounting firm by creating some software to help me come up with a fixed price for annual financial statements or annual accounts. And so this is the process for, if we did the same thing for bookkeeping. Let me share with you a little bit more detail. Now this, I'll warn you, this might start to sound a little bit complicated, but don't worry, I'm going to simplify it. I did say to you yesterday, today we get into a lot of detail. Today is a lot of detail. Yesterday was a warm-up session, okay? Yesterday was just a gentle start for you. Today we go much deeper. And so one of the things that you want to do is think about bookkeeping. What is the primary scope factor? I'm going to assume for now it's the number of transactions per month. Now for you, you might feel it's something different. Somebody asked yesterday, is there a percentage of annual revenue that you would use to come up with the price? I don't know who answered the question now, I forget. And I kind of gave a vague answer because I said in the end, I'll sort of cover it today. And this is how you might, what I'm about to show you now is what you might do with annual revenue instead of number of transactions. However, for bookkeeping, I personally don't believe that annual revenue, the sales of the client, is the primary scope factor. It could be a secondary scope factor. I think the primary scope factor is the number of transactions, or the number of sales invoices, or the number of bank receipts, or bank payments, or bank transactions, some measure of data. So let's imagine, this is fictional, by the way, so please, word of warning, and it's in the workbook, I'm not going to give you a formula for you to use. I'm going to explain a process to illustrate, okay? These numbers that I'm about to share with you are not the prices you should charge. These are some made up numbers to illustrate the process. So imagine you have some clients, I think there's 10 or 12 here, and they're called client A through to J. And then what you do is you take, say, a dozen of your clients, put them on an Excel spreadsheet, and you list the number of transactions per month, or whatever primary scope factor you prefer. But I'm going to go with that. And then you record what is the annual fee, or at least what should it be if you price it properly. Now, once you've done that, you want to do something which is called regression analysis. Okay, so this might start to feel a little bit complicated, but it'll start to make sense. And tools like Excel make this a lot easier. What you do is you plot them on a graph. So the primary transaction, the primary scope factor against the annual fee. And then what you can do, what regression analysis does, regression analysis is a statistical term that essentially means plotting a line of best fit. In other words, it's the line that best predicts the data. And I've recorded it on the screen right now. Hopefully you can see that okay. Now, that might sound complicated, but Excel does this for you automatically. Now, once you've got your line of best fit, once you've done your regression analysis, what you can then do is, and Excel does the hard work for you, so don't worry about this, but you can produce an interesting range of statistics that you could perhaps use. Things like the R-squared is a really important number in regression analysis. The R-squared is essentially, it's a number between 0 and 1. And the higher the number, the better that line predicts the data. If it was 1, if R-squared was 1, all the dots would be on the line. There's a line that perfectly predicts. You'll never get to 1. It's just not going to happen, okay? But you'll have an R-squared, and that will tell you how, to what extent the line predicts the data. But also what's really interesting is there is a formula for that line. Okay, there's a formula on the screen. Don't use it. That's not the formula for your pricing. This is illustrative. Okay, that's a hard word to say. Illustrative. So you can create a formula, and that formula you can use for your pricing. Now, the problem with this, and hang on a second, have I lost the screen? Yeah. So, and there's some of the data you can get that Excel will provide you. Okay, it'll give you a formula for the line. It'll give you an R-squared number. Now, this is not an exact science. And the reason for that is because there'll be some clients where the price that you need to charge is different to what that formula is saying. So for example, on the screen right now, if you take the client number H, the formula is suggesting that client H would be priced based on their primary scope factor, that they should be priced something like just under 6,000. But you know that client H should be more like 7.5. And therefore the formula is underpricing client H. And there's reasons for that, and we'll go into that. So you're not going to get an exact science. However, it does not matter that this is an exact science. And let me give you 4 reasons. And if you've got the workbook and you're following along, you can write these down in the workbook. There's 4 reasons why it does not matter that this is not an exact science. Here's number 1. The system we currently have is not accurate. So if you're pricing based on the hour, the first question I've got for you is, where does that hourly rate come from? It's usually, and someone asked the question yesterday, usually hourly rates are a multiple of chargeable salary costs. And in the UK, I mentioned yesterday that benchmarking studies suggest they're typically between 3 to 4 times chargeable salary costs, usually 3.5 is about the average. But why is the question that I would ask? Where does that 3.5 come from? And it largely comes from firms just copying each other. The norm in the accounting profession is that we set our hourly rates based on a multiple of chargeable salary costs, and many firms use this kind of benchmarking, or at least copying what they've done in the past, which probably came from some benchmarking at some point in the Stone Age. So firstly, the hourly rate itself is nonsensical. Secondly, we times that by something called the number of hours. And I know that number of hours on a timesheet does not equate to the actual amount of work that you do. When I was working in a multi-partner firm in the 1990s, we were never paid overtime. And yet many people would work overtime to get the jobs done. And the overtime didn't go on the timesheet because you weren't paid for overtime. Also, you were given, in the firm I work for, you were given a budget or an allocation of non-chargeable codes. You could have 2 units. In those days, it was 15, half an hour of general admin a day. You could have so much for sickness in a year. You had so much for training. So when you filled in the timesheets, you made sure you used up the allocation budget. Every day, there'd be 2 units goes down to general office admin, whether I did office admin or not, because that's what the firm said as a guideline. And then, of course, when I worked at a big firm, I sometimes worked for big audits, but sometimes I had my own little jobs that I was in charge of. These are my clients. And I want to make sure everything looks good and I make a profit on my jobs. So if I'm struggling with time, it goes to the bigger job. Now, I'm sure this never, ever happens in the profession, but I think it does. And you know, it does. Timesheets are not 100% accurate. So we take a fictional number, which is a charge-out rate an hourly rate, which is arbitrary. We multiply it by number of hours, which is not an exact science. And then what we do is we apply commercial judgment. We get that work in progress report as we finish the job and we say, flippin' heck, 7,500, the client will never accept that. I think we'll bill them 6.5. And we write time off. We're kidding ourselves if we think hourly billing is an exact science. It's not. So all I'm doing is suggesting we replace it with something, let's just turn that off for a second. We replace it with something else, which is, whilst it may not be 100% accurate, it's a better system because clients want a price up front. But there's a second reason. And the second reason is because, and my friend Ron Baker explained this to me, he said, think of your firm as an investment portfolio. If you are building up an investment portfolio, your goal, your objective is to maximize the return on investment. Now, if you wanted to maximize the return on investment, you could invest in all risky stocks in emerging countries, because those are the ones that sometimes can grow hugely. But they're also very risky. And it would be crazy to invest your future in risky stocks. But because we're risk averse, we could, at the other end of the spectrum, we could invest all our money in government bonds. But government bonds don't return much. We're not going to make much growth. And so what we do with the investment portfolio is we have a mix of different types of investments. Some are safe and steady. Some are exciting, but they carry risk. And by having the right balance, we maximize the return on investment. And Ron said to me, think of your accounting firm and your clients as an investment portfolio. Your goal, your objective is to maximize the profit of your firm. With timesheets, we're so obsessed with maximizing profit on every single client, and we're missing the bigger picture. We want to maximize our profit on the firm. Now, with that graph I shared with you, if you did use that formula, and you won't, because I've got 2 more things to share with you, but if you were to use that formula, yes, some clients like client H, you'd make a loss, but some would make a profit. And if your firm was made up of that portfolio of clients, overall, you'd make a profit. But there's 2 more reasons. Number 3, the other thing is that we're only doing the regression analysis with the primary scope factor. There's other scope factors. There's other things that impact the things I talked about, the number of bank accounts, the accounting system they're on. And so what we do is, having done that initial piece of analysis, we take a dozen clients, we plot them on a graph, we let Excel give us a number and a formula, but we don't stop there, because then what we do is we say, right, what about the secondary scope factors? And what we do is we look at the outliers. We take those clients where the price is furthest away, like client H, for example, and we ask ourselves the question, okay, so why do we actually charge client H more? Why do we charge them more than what this graph is suggesting we should charge them? Oh, that's because client H is using a desktop accounting system, which always causes us trouble. It's because they have 5 bank accounts. It's because they're in an industry that's really challenging. Whatever it might well be, you will know from your experience with clients why the price has to be the way it is. You'll know what the secondary scope factors are. And so what we do is we can then start to build our model and start to adjust it for the secondary scope factors. And then fourthly, number 4, and this is the most important one. This is the most important as to why it doesn't matter. This is not an exact science. Because all we are doing with this process is coming up with what the economists call a buyer's reservation price. That basically means your minimum price. I'll use the term base price. Because what we're going to do, we're going to take our base price, our calculation that we've got, and we're going to build on that by applying value pricing principles. The base price is just something we start with. And by the time we add on things, you will find that 9 times out of 10, you will make more money than the old-fashioned way. And the odd occasion where something goes wrong, it only goes wrong because we perhaps have to adjust our formula, because we perhaps forgot about a particular scope factor that sometimes that comes into play. And we're just going to adjust the formula. But you will find that once you've got that, when you build in the other layers, you will consistently make more money. And here's the big reason why we want to do this. When you can give a price to the client in the meeting, a fixed price, there in the meeting, you are in control of the process. And what that means is that, and I'm going to show you exactly how this works in a short while. When you're in control, when you involve the client in the pricing process, then a number of things happen. When they're involved in the process, then if your price is too high, you'll know straight away. You'll get instant feedback the price is too high. And when that's the case, we can change something. We can change the package in some way. Whereas if instead we send them a proposal through the mail or by email and give them a fixed price, when they look at that number, they'll make an instant decision, a judgment about that number. Usually they'll say, wow, 5,000? That's really expensive. And because they're reading that in their office because you've mailed it to them, you've lost control. There's nothing you can do. You're not there to deal with it. I'm going to show you how you do this to make this really, really practical. So don't worry, it's going to all come together. But what I want you to understand at this point, so if I can just summarize and kind of pull back a second, what we're trying to do is identify what are the scope factors. What are the things that have the biggest impact on our price, or sorry, on the amount of work that we do. And we're using that to come up with a formula simply to give us a starting point. Why do we need a formula? We need a formula because we're not selling cups of coffee. We have a very complex service. Every client is different. Everybody has unique circumstances. And so we need to have some sort of process that can come up with a price fast so we can give a price with confidence. We need a pricing system. Okay, so what I want to do next is talk about the challenge that people say is, okay, so how do I calculate a price? How do I come up with a price for bookkeeping services? So here is, very quickly, here's the next steps we do. Step 1 we've covered. Number 1, we have to come up with a base price. We have to take into account the scope and come up with some form of formula. Now, just to avoid some confusion, some people might therefore be thinking right now, there's a magic formula for value pricing. There's not. There's no formula for value pricing. There is no formula for value pricing. And that's because value, and I may have used this phrase yesterday, I learned it from Ron Baker, I steal it because it's a great phrase. Ron says value is in the hearts and minds of customers. Everybody values things differently. Value is a feeling. And so value pricing is a judgment. And this is where people find value pricing hard. There's no formula for value pricing. It's a judgment. And we find it hard in our profession because we're numbers people. We love timesheets because we have something that feels precise. We're measuring the wrong things, but we feel comfortable because we have something, a computer system spits out a work in progress report and gives us a number to price. And because we love numbers and we like systems, that's why we love hourly. But the reality is for value pricing, there is no such thing as a formula. However, we can start with a formula for fixed pricing. We can have a formula for fixed pricing to come up with a fixed price. Remember, fixed pricing is not value pricing. Fixed pricing is cost plus pricing, but it's better than hourly. So we have a formula for fixed pricing. Then what we do is we use judgment to build on that. So what do we do second? We've got our formula, we've factored in the scope. What do we do next? What we do is we actually give the client a choice. We give them packages. We did this yesterday. Yesterday was menu pricing. So now what we do is we give not one price, we give them 3 prices. How do we come up with those prices? Now what you could do, and this will be a mistake, but what you could do is you could cost plus each of the 3 packages. So you could use your formula to come up with a starting point. But if you've built into the middle package 3 more things, like a meeting with you, like a particular report, you could add in the time it takes you to do those things. And that will be a big mistake because you're missing out on an opportunity. We can use the formula to give us a starting point, a base price. But then what we do is we add on to that our judgment as to what we feel is the value of the other things that we are building into those packages. Okay, so at this point, I'm hoping you came to yesterday's. I'm not going back through packages, that was yesterday's. But what we do when we come to price those packages is we start to use judgment. And one of the concepts that you want to think about is something called relative pricing. So when Starbucks come up with their price for their tall, their grande, their venti, I can promise you the difference in price between, let's say, the venti and the tall is not because of costs. They've chosen those 3 price points very carefully because they've measured and they know which price points gets the maximum number of people to buy the option, the package that makes them the most money. And this is what's called relative pricing. Relative pricing means that whilst you want to make sure your prices give you a profit, what's more important is the price point for each package. You want to think about that price point relative to the other packages. And let me give you a guideline. This is not a hard and fast rule. It's not a hard and fast rule. I just want to give you a guideline to get you started. And you might want to write this down. I want you to write down 1, 1.3, 1.5. 1, 1.3, 1.5. If you're starting on this journey, your entry-level package will be a price that could be the base price. The amount you think you need to charge based on your scope analysis, your regression analysis. Your middle package, you make 1.3 times the cost. So if you work out that the entry package is going to be, let's say for argument's sake, £600 a month, $600 a month, whatever it might well be, then if we times that by 1.3, and this is where I should have got a calculator, 1.3 times 600, I think is what, about 800 would be your next package. Is that right? I don't know. You'll do the maths way quicker than me because you're an accountant, bookkeeper, you've got your calculator somewhere. But you make it 1.3. I should have picked it. Let's go with 100 a month. So 100 a month, the middle package is 130 a month. 100, 130. Top one, 150. That's a good rule of thumb. Now, there's many reasons why you might change that, but it's a good place to start. Because what you will tend to find is that most people will actually gravitate towards the middle option and therefore pay you 1.3 times the price. But one of the concepts you want to think about is what I call the upgrade nudge strategy. It works really well for pricing bookkeeping services. What that means, and businesses like Starbucks do this really well. In fact, the best example I can think of is, have you ever been to the cinema? And when you go to the cinema, do you ever get tempted to buy the popcorn and the Coke? And have you ever noticed they usually give you 3 choices? You can have the small popcorn, the small Coke, the medium popcorn, the medium Coke, and then the huge one that's massive that you can never ever possibly get through it all. And or you feel sick afterwards. But when you look at the prices, the jumps, the difference, are all designed to get you to buy a bigger package. And I fall for it every time. And someone asked me this question yesterday in the chat box. I know what they're doing, but the jump in price is small between the middle and the top one, and you get so much more. Now that jump in price is still more than their costs, but they know that what happens is people say, I was going to go for the middle one, but for just that small amount of money, I get so much more. More than I need, But greed kicks in. And what happens is many people, and I fall for this every time, is we take more money out of our pocket and voluntarily give it away, give it across the counter. So that's why, that's called the upgrade nudge strategy. What happens is if you go with 1, 1.3, 1.5, 100, 130, 150, most people gravitate towards the middle option. But then when they look at it and think, it's not that big a jump to the top one, it encourages people to say, I'll go for the top one. Okay, it's a general rule of thumb. It's not a hard and fast rule. There are many reasons why you might change it. I said yesterday that menu pricing is a fascinating subject. There are so many advanced tactics around how you build the packages, the exact price points, how you set the relative pricing, how you do it might be different for different services. You would definitely want to use a different strategy if you're pricing things like consulting work, advisory. But for bookkeeping, that's a good general rule of thumb. Okay, what I want to show you next is then, let me just, how are we doing for time, by the way? Oh, we're doing pretty good. We're on bang on track, which is good. Okay, so I just want to summarize with this again. So I mentioned that value pricing is a journey. If you're on hourly right now, just focus on moving to fixed pricing. It's not a perfect system, but it's a better system. Once you start to master fixed pricing, then start to offer people a choice with menu pricing and think carefully about the price points. They're really important. But once you've mastered menu pricing, then we can start doing other things, communicating value, options, behavioral rewards, upselling, price psychology, and many other techniques that we can use. I can't go into that today because we have a short time, but I want to make sure that it's really practical. So what I'm going to do next is I'm going to bring all this stuff we've talked about so far and show you how to do it in a really simple way. Because I know it gets sometimes a bit overwhelming and overloading, regression analysis and all this. I want to keep it simple for you and show you how you do it in practice. Before I do that though, what I want to do is very quickly just remind you that if you decide to enroll in the How to Price Bookkeeping course, I'm going to keep this short because there's loads of information on the website. Sarah's going to post, or Emily's going to post in the chat box, the link you need to go to. Enrollment's open right now. We close at 11 a.m. Eastern Standard Time on Monday. We close enrollments. If you want to work with me over the next 6 months and we go much deeper and I've got resources and systems for you, if you want to master value pricing bookkeeping and go to the next stage of your journey, then enroll for the How to Price Bookkeeping course. But remember, there's 2 ways that you can do it. You can either enroll in just the course, or you can enroll in the Bookkeepers Pricing Academy. You've got 2 options. What I'll do later on today is I'll do a quick compare and contrast between the 2, because several people said yesterday in the chat box and the questions box and in the Facebook group, people have said, which one should I do? Should I invest in the How to Price Bookkeeping training for 6 months, or should I invest in the Bookkeepers Pricing Academy? So I'm going to answer that question later on. Remember, the How to Price Bookkeeping training is over 6 months. I take you through a journey over 6 stages. In the first month, we work together on your strategy, the foundations, which will really help you to accelerate the later stages. We work on the foundations, your confidence and the strategy. Then in stage 2, we move on to how to calculate a fixed price. So if today seems a bit complicated, it's going to be much easier. I have Excel spreadsheets for you. I have systems that have done all the hard work where you can just plug in the numbers, it does all the calculations and gives you a formula. So in stage 2, I give you the formula. Then we do in stage 3, we start to perfect our packages. I've built packages for you. I've given you suggested packages for how to really effective packages for bookkeeping services. Then we move on to building the value proposition, which we'll look at tomorrow, but we go even deeper still. I've written a whole bunch of brochures and words for you to help you get the best possible price. In stage 5, we then pull all of that together into a complete value pricing system that you can use for the rest of your professional life to confidently price bookkeeping at a higher service, at a higher level. And then in stage 6, we then, having mastered bookkeeping, in stage 6, we'll then turn our attention to cleanup work. And I'll share with you how to value price cleanup work. If you only do 5 cleanups a year and you follow the process for just the diagnostic, you will make more money then you'll invest in the training. It's as simple as that. And all the rest of it's then effectively free. That 1 month, that stage with cleanup work, if you do 5 cleanups a year, I'll show you how that will generate you much more than your investment. So there's 2 ways, as I say, there's 2 ways that you can get access to the training. One is you enroll in the training, How to Price Bookkeeping, which we start at 11 o'clock Eastern Time on Monday. We'll start with a live session. Or you can enroll in the Bookkeepers Pricing Academy. And if you enroll in the Bookkeepers Pricing Academy, you automatically get the How to Price Bookkeeping course as well, and so much more. You get more in the Bookkeepers Pricing Academy, and the price is the same. But I want to give you later on a compare and contrast in case you want to have a bit more detail about the difference between the two, which is the best one for you, because it depends. Some people it's better just to have the training in How to Price Bookkeeping. It may be that it's better, you want to go beyond that. You want more help. You want me to help you grow your firm and other help as well. And we'll get onto that later. Okay, so the training, if you enroll in the training, it's hours of video-based training. We use video training. We have some live sessions, and it kicks off with a live session on Monday. Much of it's video training, so you can revisit it and work through it at a slower pace if you want to. There's also audio recordings in case you want to go back and listen to it in your car, in the gym, out for a run. There's workbooks, and there are ready-to-use resources like Excel spreadsheets with the regression analysis, ready-to-use brochures. We have a Trello board which builds up your entire packages, and much, much more. Okay, and last thing I want to tell you about before I move on to the next part of the training is I also have a guarantee. I didn't mention this yesterday, but I know that you'll be delighted with the training. But if for any reason, any time in the first 30 days, if you decide actually this isn't for you, you perhaps don't find it valuable, or your circumstances have changed, you perhaps can't afford it or whatever, at any point in the first 30 days, if you want to change your mind, email Sarah and we'll stop the payments and we'll refund your first month. So there's nothing to risk whatsoever. And you don't have to give a reason. If you decide you want to stop and it's not for you, you have 30 days to change your mind. No questions asked, we'll pay you back. And the reason I want to do that is because I know you'll love the training. It forces me to make sure I deliver value. But if I don't, that's my fault. I don't deserve to get paid. Okay, so there's no risk. And also, if you're interested in finding out more, use the link that Sarah's given you. You'll find more information on the page. If you're interested in the Bookkeepers Pricing Academy option, what you'll also find is, not that, let me just change my screen. You'll also find I've done a video for you about the Bookkeepers Pricing Academy. So you can watch that short video. That'll tell you in much more detail about what you will get. Okay, and also, if you decide today, there are still some bonuses that you can have access to. And those bonuses are, number one, let me just share them with you. I think I need to press that button. Yep. Number one is the research report on setting up a cloud accounting system. We've still got that available as a bonus if you join in before midnight today. And the other bonus, 2 of them have gone now, but the other bonus is you will get a 6-month license for the effective pricing software. Okay, I'm going to now, in a short while, tell you about which one's best for you, and then we'll answer questions, but we still got time together. What I want to do for the next 10, 15 minutes is now make this really practical. And what I just need to do is just switch my screen. Yeah, click on it. So if you want to get the best possible price, for bookkeeping work, then you need to involve the client in the pricing process. Okay, a big mistake that many of us do. I made this mistake in the first few years of my accounting firm, and that is this: the big mistake we make is we meet with a brand new client who's interested in hiring us, and we tell them about all the things we can do, and we talk about why we're different and better. And very often those meetings go really, really well, up until the point where the client then says to us, so what's that going to cost? And I used to hate that. I'd come out with a cold sweat when they asked me that question. I don't know. I've never worked with you before. I haven't done the work yet. I have no idea how long it'll take. And so what I would do is, but I knew that new clients wanted a price. And so what I did, I said, let me go and think about it, and I'll pull together a nice proposal and I'll send it to you through the post. You may remember the post, we had it in the 1990s. In the US, you might call it the mail. I would send it through the mail, through the post. And then I'd sit there in my office for the next few days, kind of with my fingers crossed, just waiting for the telephone to ring. And the client saying, thanks for the proposal, that's great, when can we start? And it almost never, ever happened. In many cases, I never heard from them again, because I'm an introvert and I hated the telephone. I hated to pick up the telephone and say, did you get that proposal? What did you think? I would just sit and wait and hope. And that's a crazy thing to do. It's a huge mistake, because what happens is this. If you deliver your price after the meeting in the proposal, this is what happens. And you've probably experienced this yourself. If you've ever asked anybody for a proposal, it may be you want your house decorating and you go to some painter and decorator and ask for some quotes and they give you a quote. When you get that quote, what is the first thing that you look for? You scan down because you want to see the price. We all want to see the price. Your clients are just the same. You send your proposal through the mail or email, I can promise you, I can guarantee they'll go through it looking for the number. And when they see that number, they've not read the rest, out of context of the rest, they look at that number and their brain makes an instant judgment. Usually, ooh, that's more than I was expecting. And very often, they never then call you. They go to the bookkeeper down the road or the accountant down the road or their existing professional and they say, I've just had this proposal. Can you beat it? And you know what they'll say. Oh yes, we can do that for less. Because we all play that game in this profession. We all try to undercut each other and focus on price, and that's why we're working crazy hard. You must not do that. You must give a price in the meeting to the client. Because then you can deal with it. You can then, if they say it's too high, you can change things. So how do you do that though? Because bookkeeping is complicated. How do we do that when we're thinking about, okay, there's scope questions, there's scope factors, we've got our menu of options and other things that we can do? Well, that's where we need to use some sort of system. We need a pricing system. That could be an Excel spreadsheet. It could be a software. You need something to enable you to give a price with confidence. Because when you involve the client in the pricing process, you get a number of benefits. When the client can see how the price is building up, it creates transparency. Whereas in contrast, if the client says, what will this cost? And you say, $500 a month, they will just think you're making that number up. And if they think you're making the number up, they're going to haggle. They're going to say, oh, that's expensive. I'm not paying that. Can we do it for less? Whereas if you have a system that you take them through, it creates transparency. When there's transparency over the way that you price, it creates credibility. It creates trust in your pricing. Also, when you involve the client in the pricing process, you've got a greater chance of converting them. Because if the price is too high, you just change something. And I'm going to show you how in a second. Another big benefit of doing this is that when you involve the client in the pricing process, what happens is they spend more money. They buy more. Because when you have a process that enables them to choose things, they can spend more money. We talked about yesterday, menu pricing. If Starbucks only offered a tall latte, if that's all you could buy, then they'd be throwing away millions of dollars off their bottom line profit every single year. But they don't. They give you a choice of 3 because they know that some people happily pay them more money. If you can, and that's the great thing about menu pricing. The only problem with menu pricing, the one downside is there's only 3 price points. And that's way better than just one. But what we really want to do is we want to try and find a way to give the client exactly what they want. Because when we give them more options, then clients can choose to pay you more money. And so we do that using an advanced technique of value pricing which I call options or preference questions. In other words, when you come up with your price, in order to come up with a price, you want to ask the client two types of questions. Number one is what I call scope questions, and we've covered that. How many transactions do you have a month? How many bank accounts do you have? How many credit card accounts? Scope questions are designed to make sure that you have some form of framework, formula, so you can give a price with confidence. But the really important questions are the preference questions, because we ask clients about their preferences. And when they tell you the answers to preference questions, they're telling you what they value. And when they value things, guess what you do with your price? It goes up. And if the price goes too high, it's fine, we can change things. We can change their preferences. You can change the package. And then once we've done that and come up with a price, we then present our different packages. Okay? Someone asked me yesterday, they said, Mark, these things that don't go into the packages. Remember I said yesterday, you want to do customer segmentation. The packages need to meet specific sets of needs. And someone said to me yesterday in the Q&A, what about those things that you don't feel fit into the packages, but they're really good things to offer? One of the things you might do is make them preference questions. You offer them, you still offer them, but you offer them outside of the package. So if you think about it, think about the equivalent with Starbucks, the way they do this. They have 3 packages. Their packages are based on size, nice and simple because they're selling coffee. The tall, the grande, and the venti. But you do get options as well, because whichever size you want, you can choose the type of milk. Do you want a skinny or full fat? I have the full fat, by the way, because I need it. And so you get a choice. You could have soya milk or whatever. You get choices, you get options. And that's one of the things people love about Starbucks, is because you can make some specific choices. Now, what Starbucks don't do is they don't change the price based on those choices. And that's simply because if you're running a coffee shop, you can't have a pricing conversation with every individual customer. That just wouldn't work in a coffee shop environment. But you can, because you work with one potential client at a time, one meeting at a time, and you can offer them the skinny milk, or you can offer them the vanilla shot. You can offer them the, what do you call it, almond milk or whatever. You can offer them those things, and because you're having a one-to-one conversation, you can amend the price based on their preferences. Okay, let me show you exactly how you do it. You want to have an Excel spreadsheet, or you want to have a software tool. I'm going to show you a software tool. It's called Effective Pricing. It's a brand new software, by the way. It's only just come out. This is I think my fourth or fifth software. I started off in 99 creating software for my own accounting firm in 99. You may have heard of cloud pricing. We launched cloud pricing about 4 or 5 years ago. Cloud pricing is awesome. I know so many people love it and have got massively higher prices. We made the decision to completely change it and make it bigger and better than ever before. It's called Effective Pricing. And it enables you to price any service you want. So I'm going to look at bookkeeping, because obviously that's our focus. And so this is how it works. You're in a meeting with a client. You've gone through the building up the value, which we'll talk about tomorrow, by the way. We've built up the value. The client wants to buy from you. When the client wants to buy your bookkeeping, the last thing you talk about is the price. They want to buy. The last thing is the price. So what we do is we open up our laptop or our iPad or whatever screen you're using, and you want to ask the client a few more questions. So I'm just going to move across to, just bear with me. I've got a model set up for bookkeeping, but also I've been logged back out because I set this up hours ago. Just bear with me a second. I need to remember what's my, I've got no idea what my email and password is. Okay, here we go. Okay, it should be there. I gave you a chance to think of some questions to put in the Q&A box. Okay, let's flick back across. So I'm now pricing bookkeeping. And so I've got a series of questions I want to ask the client. And the first question I want to know is just simple. What's the client's name? And that'll do for now. So the first thing I want to do is ask some scope questions. I want to understand a bit about the scope of the work. And so I might ask questions like, how many sales invoices per month do you raise? That's the primary scope factor. Now, it could be total transactions, it could be bank transactions. You can decide. I've chosen here sales invoices per month. But the great thing about effective pricing is everything is changeable, editable behind the scenes. And let's imagine I've got a client that raises 50 sales invoices per month. That's my primary scope factor. And so what the software does behind the scenes is it's starting to create a base price, a number based on a client with 50 transactions. But we don't stop there, because as we saw with regression analysis, there are secondary scope factors. So some of the things you might want to ask, and these are just suggestions for you, is things like, what industry are you in? What type of business are you? So we might have a firm that is a manufacturing and engineering business, and you might want to increase.
Sorry, just a quick note.
Yeah.
The screen's a bit blurry on the effective pricing. Is there a way of kind of sharpening it?
The screen's a bit blurry. I don't know there is. The only thing I can potentially do is see if I can. And it's probably a screen resolution issue. So I think I'm going to say the answer to that is no, probably. But please don't worry. It's more about just listening to what I'm saying and just getting the general concept. What I can perhaps do sometime is do a video and post the video, and then it'll be much sharper. It's a Zoom limitation, I believe. I will try and figure it out sometime. So you might want to know what type of industry it is. That could be a scope factor. Maybe you find that manufacturing businesses are more difficult. You might want to ask things like, how many divisions do they have? Now, what does that mean? Let me use an example. Imagine you've got a client that runs a restaurant, and it's one business, it's one company, but they happen to have 3 restaurants in town. Now, one of the things you could do, if you use QBO, for example, they call it locations, I think, you can post the different transactions to the specific location, the specific restaurant. It's one business, but we can post it to different parts of the business, which would enable us, if the client wanted it, to create analysis like profit and loss accounts for each individual division, restaurant, department, whatever it happens to be. Anyway, it's a scope question for now. Let's imagine there's 3 divisions in our manufacturing business. We might want to ask if they register for sales tax. Do they operate a sales ledger, or are they a cash business? How many bank accounts do they have? How many credit card accounts? How many PayPal accounts perhaps? Do they want payroll journals posting? Do they want foreign currency transactions? They're just some examples of other scope questions you might want to ask. Let's go with that. Okay, now we can start to give them preferences. If you're in the US, you probably run something called bill pay services. It's not so common in the UK, I don't think. Not sure about Canada. I think it's common in Canada. Bill pay is where, as well as the bookkeeping, you could offer to help them or pay their suppliers invoices for them. Because clients hate paperwork, they want to save time. Or you raise their sales invoices for them. And if you're in the US, you might even use a tool like bill.com for it. Now, that's an example of a preference question. We give them a choice. Do they want us to do those things, yes or no? If they say yes, it's because they would value us, place value on us saving them time by sorting out some of their paperwork, their payments, and so on. There are other things that we could do. We could ask them, would they like us to account for their different divisions or locations, yes or no? Let's imagine they do. They say, that's really cool. If I've got 3 manufacturing departments, if you could post the specific costs, that would be awesome. Great. Another question you could ask is, how frequently do you want the bookkeeping doing? Would you like it monthly, weekly, quarterly? And you could come up with as many frequencies as you want. Let's say the client had monthly before. And the client says, well, I've always had monthly with my previous bookkeeper. Why would I want it weekly? Well, the reason why you might want your bookkeeping done weekly is it means that every single week it's up to date. That means every single week you can see what your numbers are like, what your profits like. You can see what your sales ledgers are, who you owe money to. That sounds really cool. I've never had that. Yeah, let's have weekly, please. So now what they're telling you is they would value weekly. If they're saying they value weekly, guess what happens to your price? It goes up. Other things you could offer, and these are merely just suggestions for you, ideas, you could offer to scan their records so they don't have any paperwork. You just scan them and give them a USB stick back and you destroy safely their paperwork. It may be that you offer to work at their premises. It may be that you offer to have a review meeting with them, perhaps a quarterly meeting or a monthly meeting or just once a year, a review meeting just to give them some advice or something. Let's say the client says quarterly. And we can offer as many preference questions and choices as you want. My advice is always give the client at least 3 preferences at least 3 things they can choose. Think of this as putting things in the virtual shopping basket. We're giving them a choice of different things. Do they want us to scan their records, yes or no? If they say yes, they're basically telling us they would value that. If they value that, we charge a higher price. Now, once you've asked your questions, we now get to the page where we can set out the different packages, the different options. Now, ideally, what you would want to do is you would want to have, and we'll talk about this a bit more tomorrow, but you'll want to make sure that before you get to the point of opening up the software, that you've gone through some form of brochure, you've built up the value, you've presented the different packages you've got, not the prices, just the packages. So they understand that there's different options and they can start to identify which one's right for them. But if you haven't, you can do it with the software. So at this point, what I would do is I would ask the client the question. So these are the 3 packages we have. Let me explain what we do, what you get, what you don't get. Which of these do you feel is best for your business? And they might say the middle option. Okay, let's imagine it's the middle option. Once we've asked our questions, our scope questions, we've got our preference questions, we know the client wants the middle one, the last thing to do now is reveal the price. And so there's a button for that, and we give a price. In this case, it's 12 payments of 807. Now, the great thing about this process and involving the client in the process is it becomes predictable. And this will help with your confidence because there's only 2 possible outcomes. The 2 outcomes are this. Number 1, the client says, oh, right, that sounds great. When do we start? Great, you're happy, and hopefully you've set this up with good prices. You're happy, it was nice and easy. The only other thing that can happen is the client says, 807 a month. I can't afford 807 a month. That's not a problem because we've planned for that. And what we've also done, there's lots of psychology built into the software and the process that you're going through. I don't want to go through all the psychology right now, but what we do is we create an anchor in their mind. They had no idea what the price would be, but now you've revealed 807. It creates an anchor. It might be too expensive, but now it's changed their expectation of what they might have to pay you. They want to work with you, it's just the price. So now what we do is we say to the client, well, the reason it's 807 is because, and I've hit the back button, it's 807 because one of the things you asked for was you'd like us to account for your divisions. You have 3 manufacturing sites. And actually that's quite time consuming because what it means we have to do is every single expense item and income item, we have to make sure we ask you or find out which of your 3 divisions it relates to. So let me ask you a question. On reflection, how important is it to have divisional analysis, divisional accounts? Well, I've never had that before and I don't really understand it, so perhaps it's not that important. So what the client's now doing is they're reassessing the value. And what we do is we're effectively taking one thing out of the shopping basket. We'll take out divisional analysis and we just go back a page and it now calculates within seconds a new price. It's now 684. Now what happens is the first price was 807. 807 creates an anchor in their mind. And so when you reveal 684, this feels a lower price than had your first price been 684, because the 807's created a different expectation in their mind. At this point, they are more likely to say yes to 684. And if that happens, then you're really happy because that's still a great price. But if it's too high, it's not a problem. Because what we do is we might change something else. So we might say, well, the reason it's 684 is, I know you said to me earlier that your current bookkeeper does the bookkeeping monthly. We can do it weekly, but it will cost a bit more money. So how important is that to you? Would you like to look at it monthly? Or perhaps you can change something else. Maybe you don't want us to scan the records. No, actually, I think it's the weekly bookkeeping. What would it be if it's monthly? Because I'm happy with monthly, it works for me. Well, if it's monthly, then our price becomes 585. And what happens with this process is we just keep going backwards and forwards, taking things out of the shopping basket until the client says yes. And what happens is you'll get a higher price because you start off with a high price, which creates an anchor in their minds, and then you change things until they say yes. Now, what happens if you change everything, all the preferences, and we could take out the bill pay services, We could not scan, we could perhaps not work on site, we could not scan the records. If I was to take everything out, with perhaps no review meetings, for example, we're down to 396. And so somewhere between, we've raised the expectation with 807. That's going to the anchor in their mind. There's a very good chance that they will pick somewhere between the 807 and the 396. Of course, if that's still too expensive, there's more things we could do. They could always go for the essential. You might say, well, if that's outside your budget, why don't you go for the essential bookkeeping just for this year? And then in 3 months' time or 6 months' time or 12 months' time, we can always review it. You can always upgrade later. Do you know, that's a good idea. You know, I think I probably just need the essential bookkeeping. Now, there are many more things that you can do. There's a process for offering behavior rewards or discounts. You also, once the client says yes, you then want to take the clients through an upsell process, because once people say yes, they're in what's called buying mode, and they are, let me just switch back for a second, they're more receptive to buying more stuff. There's loads more that I could tell you, but I wanted to just show you that to give you a flavor for how you can involve the client in the process, and how you can then come up with a price with confidence, knowing that that price is going to be profitable for you, and probably way more profitable than what you might have got before. Okay, I am just checking something, because I think I had a slide to show you which I've lost somewhere. Yeah, I think I lost a slide. Never mind, I'll tell you verbally. Okay, so let me tell you just a little bit more about the software. Then what I'm going to do is tell you what's the best option between How to Price Bookkeeping as enrolling in that and the Bookkeepers Pricing Academy, and then we get on to questions. So the software it's been released a little while ago to members of the Value Pricing Academy. It's been released this week to members of the Bookkeeping Pricing Academy. The pricing of it is, if we have different plans, and I was hoping to show you the screen, but I can't. The plan, the middle option, the full plan, which is the one that we will give you a coupon code for if you join today, the full one is in US dollars, $125 a month. The price depends on your currency, but it's 100, and so you'll need to go up or down depending on your currency. But for $125 a month, that particular plan allows you to do unlimited quotes for up to 50 clients. You can also price 10 different services. I will be teaching you how to price bookkeeping services, and you can have 5 different users. So it's $125 per month for the software. However, the bad news is you cannot buy it, because, and the reason for that is we are only making it available to the people that we work with in the academies. We are not going public with it until at least the end of August, probably the autumn or the fall. And the reason for that is because we want to help the people that we work with get success out of it. So before you say, Mark, can I buy it separately? Yes, just not yet. But if you decide to enroll in the How to Price bookkeeping, and you do it today, we'll give you a 6-month license to use it. If you join the Bookkeepers Pricing Academy, there's a different arrangement. So let me wrap up with one final slide, and then what we'll do is, just press that. So if you want to work with me for the next 6 months on how to price bookkeeping, you have 2 options. And when you go to the page that Sarah's put the link to, Sarah, you might want to put the link in there again, just so, because the chat box I know has gone mad. And so when you go to that page, you will see there's 2 choices. You can either enroll in the How to Price Bookkeeping course, or you can enroll in the Bookkeepers Pricing Academy. Which one's best for you? Well, the price is the same. If you enroll in the How to Price Bookkeeping course, it's 6 small payments of $156. If you're not from the US, it's a different price depending on your currency. So you'll be able to see the price. Go to the page, you'll see what it is for you. But in US dollars, it's $156. If you join the Bookkeepers Pricing Academy, it's just $156 per month. And one thing just to be aware of is, and I do this with both my academies, we review the price of our academies at least once a year. It goes up. but it never goes up for existing people. In other words, if you join the Bookkeepers Pricing Academy before we close enrollments on Monday, that price will never, ever change for you. And we always make it better and better and better. We've made a lot of big differences this year. A lot of new things have come in. Existing people don't pay a penny more. Second thing, which option is best? For both of them, the enrollment closes at 11 o'clock Eastern Standard Time on Monday, okay? We are closing the Bookkeepers Pricing Academy. We're closing the How to Price Bookkeeping training because we go live with it. And both of them have the 6-month training program. So if you join the Bookkeepers Pricing Academy, you automatically get the How to Price Bookkeeping training. But if you also join the Bookkeepers Pricing Academy, you get access to Marketing Monday. What that means is that you go live with me once a month on a Monday, where I teach marketing. So over the next 2 months in the Bookkeepers Pricing Academy, in August and September sessions, I'm going to be teaching how to build your lead generation system, how to get people who are interested in working with you so you can accelerate the growth of your business. In the first month, I'm going to share with you and teach you a process for how you can position yourself as an expert and something you can use at the heart of your marketing. And then on the September session, we'll build on that and create a lead generation system for you. So that's Marketing Monday. Every month in the Academy, I teach an aspect of marketing to help you win more clients. We also have Foundation Wednesday. Once a month on a Wednesday, it's always the same week, I teach you some foundations of value pricing. Beyond what we do in the How to Price Bookkeeping course, we go deeper on other value pricing areas. And you also get access to once a month to the amazing Teresa Slack. She's one of my star students who's doing such amazing things in her firm in Canada right now. She now teaches how to help you build a better business, and she focuses very much on systems, the systems you need to build a more successful business. It's not on the slide, but you also get access to a community. It's a closed, small Facebook group. And most important, you get the full version of the effective pricing software, that pricing software. So if you do the How to Price Bookkeeping and you join today, you will get a 6-month license of the software. But you have to enroll today in How to Price Bookkeeping to get the software, or at any time between now and Monday, you enroll in the Bookkeepers Pricing Academy, you will get immediately the effective pricing software for no additional price, and you will get to keep it for as long as you're part of the Bookkeepers Pricing Academy. So that's the difference between the two. It's entirely up to you. The price is the same. You just get much, much more if you decide to stay in the Bookkeepers Pricing Academy. Okay, I think that's bang on time. I'm going to answer questions now, Sarah. And I'm sure there's loads of questions from today's session, because there always is when we talk about how to come up with the price, and there may be questions about the software and all sorts of things. So Sarah, let's go with questions.
All righty, let's go. Okay.
Oh, and before you do, Sarah, I forgot one last thing. Tomorrow is the last day.
You've gone. Mark, you've gone. Oops. Bear with us, everybody. I'll just go and get him back. Okay, so we've got you on slide now, Mark. Sorry, everybody, a bit of a technical hitch there. I do apologise. We are trying to get feedback. So, Mark, just to let you know, you are showing your slide, but there is no audio from you. And we can't hear you. So, if you have any questions, there are 51 questions in the questions box already. We'll try and get to as many of those as we possibly can at some point in the next few minutes when Mark gets back to us. But if you do have a question, please do post it in the questions box, the Q&A box, rather than the chat box. And please If you have a question that doesn't physically get answered today, please do post it in our value pricing for Mark Wickersham group, Facebook group, and we may be able to answer it in there as well. Oh, that's your hand, Mark.
I know, I am trying to...
I've got your voice now, not your screen though.
Voice.
Yes, I've got your voice.
Awesome, that's good. Let's go with audio now. So do something else, but this will be a different camera shot. So just bear while I just hit this button here, and wow, that's blurry. Okay, I am back.
Great stuff.
Hello.
There you go.
A cable fell out or something, whatever. Anyway, we are here, Sarah. I was about to say before I lost you, was just so you know, tomorrow is the last session. Tomorrow we focus on how to build the value, how to communicate value. Anyway, Sarah, well done for chipping in. What's the first question?
No problem at all. It was good fun. Okay, so questions. Janice says, do you think that there's a different title that we can use instead of bookkeeper? It seems that the profession of bookkeeping is so undervalued. People still seem to associate it with an easy job or a job that their mother or sister can do for free. So any thoughts on that?
Yeah, we spend a bit of time, sorry if the audio is a bit different. We spend a bit of time actually over the next month on the training on what the right words to say, what are good words, bad words, and so on. And you are absolutely right. The problem with bookkeeping is that it's got a low value perception, and words are really, really important. In fact, think about tomorrow, we're going to talk about a lot about words. Tomorrow is about communication. So I'll keep this answer short because I think I'll probably answer it better tomorrow. But yeah, you want to come up with some different language because bookkeeping kind of implies data entry. And so one of the things that you could do is think about what is it you do in terms of what's the end result you get for a client? How do you help them? And think about the words that describe the end result. And then take those words and think, how can I turn that into a better phrase, a better language than bookkeeping? I may give you some more thoughts tomorrow because tomorrow's focus is largely, there's some other things as well, but largely the communication, the building the value. But I hope that helps for now. Sarah, what's next?
Sorry, here we go. So in case a client uses cloud-based apps, should we include the prices of the apps in the packages or should we let the client pay for them separately? My personal opinion is that the client should pay for them as we don't know what software would be more appropriate for them.
Okay, we had that question yesterday actually, and I answered that one yesterday. And I explained the reasons why, so I'll keep it short today because the recording's available. If you go to the Q&A session from yesterday, my view is I would include it because it creates one buying decision. It's much simpler to do that. And if you then use a system like I've just shown you, once you've got an Excel spreadsheet or software, it then becomes one of your options you give the client. You let the client choose, but you can then build it into your pricing. And therefore you might actually offer the client a range of different software. You could offer, the price could depend on, for example, whether they're willing to use QuickBooks or Sage. The price could depend upon things like whether they're going to use Receipt Bank or not, which makes your life easier as well. And then you can build in the costing of that and you can include that and provide that. So you can start to get more creative. So I'm hoping that, as I answered it in more detail yesterday, but hopefully with what you saw with that pricing process just now, you can start to become creative and build in that into your pricing structure. Next, Sarah.
Okay, so I had one from anonymous attendee. Do you have suggestions for helping my sales reps handle rejection? I have some employees that are deeply affected when clients don't end up purchasing our services.
Okay, we all hate rejection. We hate the fear of people saying no, and that's partly why we're too cheap, because when we give a client a price, we usually give a price which is a number we hope they'll say yes to because we fear the objection. We fear the rejection, and therefore we usually end up going too cheap. What I would probably recommend is that, I'm not a sales trainer, by the way. The best people to teach you how to deal with rejection and objections and stuff like that is sales training. I do in my, let me think, in the Value Pricing Academy, I do teach a little bit around objection handling scripts. It's quite advanced training. But one of the, just to give you an answer quickly now to help, is again, it's using that kind of, let me give you two things. There's two things. If you get an objection, number one, it's partly because they don't see the value. And that's because we've not built up and explained it. And that's what we'll talk about tomorrow a lot. So tomorrow will hopefully help with that. And secondly, it's about having a system to just then change the package. So like I just shared with you, if you can change the package, and if you deal with it, if you build the value and change the package, you're going to make it much easier to convert business. Right, Sarah, what's the next question we've got? I can't hear you. You might be on.
I forgot to unmute myself. Bev says, what are the hours scheduled for the 6 months of your training? How much of our time will be needed?
Time, okay. It's not a huge amount of commitment because there's not going to be many. We kick off with a live session. There may be some more live sessions, but most of it then is video based, and it's the resources that are really powerful. It's roughly speaking, and I've not added up, but I think it's something like a couple of hours every single month, and we drip feed content every couple of weeks. So in week one, you'll get, I don't know, about an hour's worth of training, and then things to do and resources to start using. And then another 2 weeks later, you get some more. It's in bite-sized chunks because what I want to do is make sure that you can go through this journey and work through it. I don't want you to be overwhelmed, overloaded. If you want more stuff, and some people do, if you want more and you want to move faster, then of course, if you join the Bookkeepers Pricing Academy, in addition to that, you'll get training from me on marketing, on value pricing, and Teresa as well. So if you want to move perhaps slower, and you don't want to be overwhelmed at all, you may well find that simply enrolling in the How to Price Bookkeeping course is sufficient. If you want to move at a faster pace and you want more content and more ideas to help you in other ways as well, then you'll get so much during the Bookkeepers Pricing Academy as well, with the live sessions with me and with Teresa. So I hope that helps. And of course, you'll want to be able to get the best out of the software and start playing with that and getting that set up. So there's plenty of stuff for you to get on with. But I try to keep it manageable, the journey. That's why it's a 6-month program and not a 6-day program. Whereas these 3 days are intense, as you know. In these 3 days, you're getting a lot of information and it may be overwhelming to you. No problem. We'll get there. It's a journey. It doesn't happen overnight. But if you work at this step by step over the next 3, 6, 12 months, you will start seeing great results. Sarah, what's the next question?
So Irina says, I realise this topic will be taught in the BPA programme for which I signed up already. However, I'm about to sit down with a potential clean-up client. I signed the NDA, will have to quote a price, but I'm at a loss when it comes to pricing clean-up. Are you able to help?
Irina,
resources.
Try to help. So because you're now in the Bookkeepers Pricing Academy, one of the benefits is that you are part of the Academy Facebook group as well. You will have had an invite this week. And so for those of you that are in the Academy, you're probably in both my Facebook groups. There's the Academy Facebook group and then the big Facebook group that everyone's in. If you've got questions for me, put them in the Academy Facebook group because I will do my best to help you. And if I've got things I can help, I'll spend more time helping you. I might do a video for you to help you with that. So given that you're in the Academy, I won't go deeper now. I will answer that for you and help you offline. Next question, Sarah.
Okay, Mark says we are not meeting clients in person due to the virus, so can we involve the client in pricing in a phone call or Zoom? How do we do this without physically meeting the client?
Mark, that's a brilliant question because yes, the world is changing. And I would suggest to you that a Zoom meeting or a virtual meeting, whether you use Microsoft Teams, Zoom, Skype, GoToMeeting, whatever it is, a virtual meeting is almost as good as a face-to-face meeting But a telephone call is way worse. Don't use telephone calls. You want to use a virtual meeting. We're using Zoom right now. And here's the reason for that. The reason for a face-to-face meeting is because you want to involve the client, you want to ask questions, you want to show them stuff. A virtual meeting is great as long as two things. Number one, the technology you use enables you to use a webcam. You must use a webcam, and ideally get your client to use a webcam. Why? Because we're in the relationship business. People aren't buying cups of coffee from us. They're not transactions. They want to work with an accountant or a bookkeeper they feel they can get on with. And so the great thing about a physical meeting or webcams is you can get across your personality, your enthusiasm, your excitement for what you do. And secondly, if you can make sure they're using their webcam, a lot of communication, as you know, is through things like body language. Now, I know you can't always see body language like crossed arms on a webcam if they're right up close, but you can see facial expressions. And facial expressions will start to tell you things like how they're reacting to your price. So a webcam is really powerful. It's not quite as good as a face-to-face meeting, but it's very close. And the second thing is make sure that you use technology that now allows screen share, because then you can show things. So if you're using an Excel spreadsheet for pricing, or if you're using a brochure, if you're using Effective Pricing, the software, you can do that equally well through a virtual meeting. Whereas a telephone call, you can't do either of those. You don't see the client, they can't see you, you can't show them stuff. Telephone calls are not a good way of having a communication about price. Virtual meetings are brilliant, and that's the world we live in these days. We are increasingly moving to the cloud, moving to the cloud and virtual and webcams, and increasingly your clients will be too. And so it's now becoming almost the norm of having meetings in that particular way. Thanks, Mark. That was a great point. Thanks for raising it. Sarah, what's next?
Okay, so another anonymous attendee, if one adds value as opposed to simply segregating existing services, doesn't the workload increase proportionally?
Just say that one more time.
If one adds value as opposed to simply segregating existing services, doesn't the workload increase proportionally?
No, and this is what's great about our profession, is that we do compliance work, and we'll focus on bookkeeping because that's the thing. Bookkeeping is quite time intensive. It's data entry. It's quite, I know cloud technology helps us, but it's still quite time intensive. When we think about the things that we can do to add value to a client, very often they're also some of the easier things. And so, for example, one of the things that's valuable is producing reports specific for their business with the right, which have been set up to best help them. Technology makes it really, really easy. The press of a button, we can produce a really valuable report in 6 seconds. But the value of that is way more than 6 seconds worth of data entry work. If we are doing things, adding value by having a meeting with the client once a month to then help them understand the numbers, give some advice, that hour of your time in a meeting is way more valuable to the client than the hour you spend adding up some numbers. So very often it's the added value stuff, the extra things we can do, which are highly valuable, but less time intensive, less cost intensive. And as long as we price them based on the value, what happens is we then find that the more expensive a package they buy, the more money we also make. They're the more profitable. They're more valuable to the customer, more profitable to us. A bit like the Starbucks story I told you. They make more profit when you buy the more expensive, the bigger packages, the bigger options, because relative to the tall latte, it has less coffee in. Okay, next question, Sarah.
Jose says, how do you work around the hourly wage if you are trying to find clients through Upwork?
Trying to find clients through Upwork. I'm not sure what you mean, Jose, because as far as I'm aware, Upwork's for finding contractors, people to work for you. You wouldn't find, forgive me, I don't use Upwork. I didn't think that was a system for finding clients. I thought that was a system for finding contractors, people to work for you. So I may need some clarification on that. So Sarah, can we move to the next question?
Absolutely. Susan says, where do you get the transaction number? So when you were showing the software, how many transactions, where do you get that number?
Get it by asking the client. And the client will either know, or you should be able to find it from their accounting system. And I believe there's various tools and so on that will be able to report that number for you. But not only that is, you don't need an exact number, and that you may have noticed in the software that there's a drop-down box with ranges. If you've got 50 to 75 transactions a month, it's this price. And the reason you want to do that is because if they have 50 transactions this week and 51 next month, you don't want to change the price for one transaction change. You want to have probably broader ranges than that. And I know we didn't go into this, but there are the primary scope factor for bookkeeping. When the firms that I work with who do bookkeeping, some of them, it's the number of transactions. For some, it's the number of sales invoices. For some, it's the number of bank transactions. I know of one bookkeeper who set up the software and it's just based on the number of pages of bank statement. Because remember I said it's not an exact science. We're coming up with a rough framework and we enhance it through additional secondary scope questions. And then of course it's the preferences and the packages and the value pricing stuff that then takes it to another level. And so it's not an exact science as a formula, just like hourly billing is not an exact science. And so you want to find the primary scope question, the question you ask, wants to be one where it's relatively easy to identify. So in the software, you might have seen, I showed number of sales invoices per month. And the reason why some people ask that question is because most clients, most businesses know roughly how many sales invoices they have per month. But if you asked how many purchase invoices, that can be a harder question. So it's entirely up to you as to decide which question you feel is most reflective, most accurate, but also it's about getting the balance right. It wants to be a number that you can access quite easily, which usually with cloud accounting these days, you should be able to find that number without too much work, but you could always simplify it by looking at something like sales invoices. Or as one person, as I said, does, it's the number of pages of bank statement, which is an interesting one. Next question, Sarah.
Okay, so Wendy says, thank you for providing this medium of information. How can a new bookkeeping business apply this concept effectively? You focus and address mainly experienced businesses and businesses with clients.
That's a great question. So if you're a brand new business, just started, then that whole thing around regression analysis, you may not be able to do because you just haven't had enough experience, you haven't had enough clients to do that knowledge, without knowledge. So one of the things that we do in the training is I have created a model for you, and we will be building into the software. In fact, there is actually there's another software tool that I will give you access to as part of, if you join and work with me, where what I've done is I looked at the 2,683 sets of data from the survey a year ago on what people price for bookkeeping services. And I hired a mathematician stroke statistician, and he went and took those 2,683 sets of data and he carried out some complex regression analysis to come up with, and what we came up with is a formula for the bookkeeping profession. And we created a formula for all the main countries. So we split the data between the countries. And from that formula, we created a formula based on what the average firms are charging, what the top 25% of firms are charging, and the top 10% of firms are charging. And then at the back end of last year, I wrote a piece of software that builds all the formulas in. And that piece of software, I can get you that software as part of the training if you work with me. It's software that you can use to come up with a price based on the research, based on what other bookkeepers are doing, rather than having to do your own analysis of regression. So I give you all the tools to do your own regression analysis with Excel spreadsheets and stuff. I also give you some software with the answers built in already. And then you can choose what you do. You can either go and do the analysis, or you can just use the formula I've created for you based on the research. Hope that helps. Next question, Sarah.
Okay, so Christina says, how would you adjust the price for the number of personal transactions during the scope finding process?
Okay, so in the UK, I think we call it out-of-pocket expenses and personal transactions. So that's when we buy business expenses on our personal credit card, and that's when we put personal things through the business. So you could do that in a number of ways. It could be a simple question: do you put personal expenses through? And if they answer yes or no, if the answer is yes, you could then increase the price by 5% to reflect that. It's a lot of it's down to judgment as to how you do it. I mean, and also what you don't want to do is you want to avoid, one of the temptations in our profession is because we are numbers people, we want to strive for something being absolutely perfect. And I know that people who use the software, sometimes people want to ask a million questions because they want to get it just right. And it's kind of missing the point, because I remember I gave you those 4 reasons why we're not looking for an exact formula. It will never be perfect because we live in an imperfect world where every client is different. And you could spend years and years and years trying to coming up with the perfect formula. And by then the world's passed you by and you've missed opportunities. Remember those 4 reasons that we have an imperfect system right now, which clients hate. Whereas when we have a better system, it may be imperfect, but it's something that we can give a client a fixed price. And then we just build on it. We build on it because we're starting to move to value pricing. And ultimately, I said to you yesterday, I believe, that ultimately costs are irrelevant. Our clients don't care about our internal costs. The clients care about the value. And so as we master this and move on this journey, as we start to master the communication, the process of coming up price based on value, you will come to a point in time where you will realize that because you're pricing using value pricing, you don't need to know a lot of scope questions. You don't need to know whether there's personal expense or not, because they're minor secondary scope factors. Yes, there'll be some things you will need to know, because a company with 50 transactions a month and another with 5,000 a month, there's a big difference in scope of work and the price needs to still reflect that. But a lot of the other things, you'll get to the stage where as you get better at focusing on value and pricing based on value, the detail is more of a distraction. I hope that makes sense. I did say to you yesterday several times, and I think today, value pricing is insanely difficult. This will take you time to master. And so we just take it one step at a time, and each time you'll perhaps refine your model. If, for example, you use effective pricing, what I always encourage you to do is start with a simple model. And then build on it based on experience, based on the things that you learn. You think, do you know what, that would be a good question to ask. Let me ask that one. Don't try to be perfect from day one. You'll never be perfect from day one. Okay, next question, Sarah.
Okay, so Ben says, did your software have the facility to increase the quoted value priced fee on the basis of classifying the client themselves rather than the work in isolation as being more demanding or harder work to deal with throughout the year?
I'm not 100% sure I understand the question, but I know what the answer is. The answer is yes. And I know that because I know I've not shown it to you today, but the software is infinitely flexible. When you use the software, I will provide you with ready-to-use templates, models. So that one I've just shown you with how to price bookkeeping, I've built that for you, and you can use that exactly as it is if you want to. Or you can build your own. Or you can change it and edit it. You can change any of those questions. You can take some questions out. You can add some more ones. And you can change all the numbers behind the scenes. It's really easy to change everything about it, because ultimately you can price any service you want. All you've got to do is decide for yourself, what do you feel are the primary scope, the scope factors, and what are the scope factors, and what are the options or preferences you might give. So I'm going to give you a model to get started with bookkeeping work, but it may be that you want to price, let me pick, payroll. It may be you want to price payroll services. And for that, you'd ask different questions. There's different scope factors. So for payroll, the primary 2 scope factors, how many employees have you got? And are they paid weekly or monthly? There's loads more secondary scope factors, like do you pay overtime rates? Do you Do you put expenses through payroll and so many other things you could do? But there's a different set of scope questions, and there's a different set of preferences. With payroll, you might say, do you want physical pay slips posting out or mailing out to your employees? Or do you want digitally secure pay slips? Do you want us to manage for you holiday records and holiday pay? There are so many different questions for payroll. And so ultimately, it's entirely up to you. You can build the models to suit what you believe are the most appropriate scope questions and what options and choices and preferences you want to give. Next question, Sarah.
Okie dokie. So Jacqueline said, in the software, can I put in my own pricing marker to come up with a price?
Yes, absolutely. You can, I provide it with a pricing model set up, and it's provided with some numbers behind the scenes, some prices. And what I always recommend, and by the way, I forgot to say, if you join the training to enroll in the How to Price Bookkeeping today, and therefore get a 6-month coupon code to use the software today, or between now and Monday, you join the Bookkeepers Pricing Academy, then when we go live at 4 o'clock UK time, 11 o'clock Eastern Standard Time on Monday, we're actually going to do 2 sessions. The first session is going to be about 30-40 minutes, which is a kickstart session designed for me to explain much more about what you've got access to, because we'll unlock the first section of training, and I'll walk you through that, and I'll answer questions. And then after 45 minutes, I'm going to run a second session for those people with the software of, again, about 45 minutes. And I'm going to show you how to register if you've not done so already. I'll give you a quick tour of it and I'll answer questions. So I will be helping you so you can get up and running straight away. And having just said that, Sarah, I've completely forgotten what the question was. Sorry.
I can't help you. Oh, was it the Jacqueline's one? No. Can you do your own price marker?
So tell you about prices. Yes, so it comes with a suggested a model that you can with pricing that I've put in behind the scenes. Of course, my price is just suggestions, they're gut feel. Remember, I said to you, value pricing is more a judgment, it's more feel. But one of the things that you can do with the software really easily, and I'll show you how you do this, is when you grab that bookkeeping model, behind the scenes is a place where you can test and play with the numbers really easily. And so you would just simply think of a client you've currently got, put the numbers through, answer the questions, see how the price comes up. And if you feel the price is, I don't know, double what you feel comfortable with, it's really easy to just change it and just scale it back a little bit. Or it might be the other way. Of course, it may be that you're in South Africa, and in South Africa, the numbers in Rand are very, very different. And there's a really easy way just to switch it and make sure the numbers are more appropriate in South African Rand rather than US dollars when you present your prices. I'll show you all of that on the bonus session on Monday. And if you miss it, we'll record it as well. So the live session is designed to get you up and running fast with the software and the settings behind the scenes so you can change it. So great question. Sarah, how are we doing for time? We've been going for just over 2 hours. Let's keep going for another, I don't know, 4, 5, 6 questions, Sarah. I'll leave it to you.
Okay. Anise says, and somebody else said this as well, is it possible to skip fixed pricing and go straight from hourly to menu pricing? And if I just have a quick look, I believe there was another person who asked exactly the same question about can she jump from hourly to fixed or menu. So can I jump from hourly pricing to value pricing, Laura?
Okay, yeah, and the question that is, yeah, of course you can. Everyone moves at a different speed, at a different rate. Some people, this whole concept of value pricing is like a light bulb goes on, and within 3 or 4 months they get it. I have some people in the academy right now that you will get to meet who are doing amazing things. Teresa Slack is so extraordinary. She got it very fast, got amazing results, and she now teaches the things that she's doing as part of the Bookkeepers Pricing Academy. Some people get it fast. Some people, it still takes a year, 2 years for it to properly sink in. Value pricing is difficult. Some people get it straight away. Some people take a long time. I'm going to do my best to help you get there as fast as possible. But I teach it in stages, in steps, because I know some people need those little steps. But if you want to move faster, you can do. And that's what the Bookkeepers Pricing Academy is all about, because we run live sessions every month. And some of those will go into things deeper than we might do, for example, through the structured 6-month training. So simple answer is yes. Yes, it is possible to make the transition, to move much faster. It all depends on you and how quickly you grasp the concepts. Next question, Sarah.
Okay, so Alexandra says, when you are putting plans together for different services, e.g. bookkeeping, payroll, self-assessment, would you go through 3 options for each with the client or offer them as preference questions?
I think I've got just say it one more time, sorry.
When you are putting plans together for different services, such as bookkeeping, payroll, etc., would you go through 3 options for each with the client or offer them as preference questions? Yes,
I would do them separate, but essentially you have there's some training I do in the Value Price Academy. It's more advanced, but let me give you a quick overview. Is I have a process which I call preferences versus bundles versus upsell versus cross sell, and essentially what that means is that with everything that you could possibly do. So we'll talk about bookkeeping. So you could offer payroll as well. You've got 4 choices. You could either with payroll make it a preference question, just like I showed you bill pay services. It could be a preference, or it could be something you build into one of your packages, or it could be what's called an upsell. And we've not touched upsell today because it's a bit more advanced, but the software, I think I showed you in the software briefly. The upsell is where you give people the choice, the option, but you do it after you reveal the price. And there's some interesting dynamics and psychology takes place. And then the 4th option is the cross sell. The cross sell means that you price it separately. You then just go through the same process, but separately. You ask different scope questions, preference questions. You might have a different brochure, different packages, and so on. So there's 4 ways of doing it. And which one you choose depends on what it is that you're talking about, because there's some general rules of thumb. So for example, if it's bookkeeping and payroll, I would always price payroll as a separate service, because there's different scope questions, different scope factors for payroll. There are different options that you could offer. And also because payroll is a fundamentally different service to bookkeeping. I would tend to, when I'm pricing, if I was trying pricing bookkeeping, the things that I'd build in as options or into the packages would be things that are related to bookkeeping and related to that customer segmentation we talked about yesterday. So I wouldn't build in payroll unless, when you go through your customer segmentation exercise, you've decided there's one particular type of client that's the person that wants bookkeeping and payroll. And you therefore might make your premium service aimed at those people. But generally speaking, I think it's best to price payroll separately. Hope that helps. I do a whole 90-minute training on that subject as to identify different things and where you might put them. But essentially, you've got those four choices, and you just have to think. And it may be testing. You might just need to test as well, because sometimes it's not always. There's sometimes. Let me think. If you offered somebody an extra report, that could be something you offer as a preference up front. It could be an upsell afterwards, and sometimes there's no right or wrong. You just have to test and see which one works best for you. Okay, next question, Sarah.
Okay, so Josie said, how do you secure the price in the meeting when you involve the client? Should we have some sort of document for the client to sign before we walk away?
Yeah, yes, it depends on the process, the system that you go through. So one of my star students in the UK that some of you may have heard of now, Reza Huda, who's extraordinary. I've been mentoring him since 2015, and he's now actually running his own mentoring program, teaching accountants the things he does. He's one of the most extraordinary accountants I know of in the UK, and rapidly becoming a star on the speaking circuit. So Reza Huda He shared with me a few months ago, sorry, 2 or 3 years ago, the process he goes through. So when he meets a new client, for example, a prospective client, he goes through the process I teach of building up the value, asking questions. And when it comes then talking about his solution, he used a series of one-page brochures, and I provide some of those as part of the training. And what he does is he uses each one to build up the value. And each brochure has in a single page, the 3 packages. So it may be that the client's interested in payroll, bookkeeping, cloud accounting setup. He'll go through each of them separately, build up the value, and then he'll use the software to come up with the price. And then what he does is he writes the price on the one-page brochure he has. And he then rings the one the client says, yes, I want the middle one, I'm happy with that price. And he does that, and he kind of marks it up like that. And then he goes away and creates a beautiful proposal for the client to sign. But in the meeting itself, he gets something in writing that the client agrees to, and then the engagement letter is done afterwards. That's one way that you could do it, certainly. It could be that you might have a system where you can actually produce the documentation there and then. It might be that you get them to sign if you're in the UK, you might use direct debits. In the US, you might use ACH. You could get them to sign up your payment plan straight away. And that's great if you can do that. So you've got different options. The answer really depends on what other software that you use. What software do you use for doing your proposals, your fixed price agreements, your payment plans, and whatever? The more commitment you can get at that meeting, the better, the more commitment. But even something as simple as just writing it down, giving them some brochures and saying, you've chosen this one, this is the price you've agreed to. Once it's in writing like that, they don't usually change their mind. Hope that helps. Next one, Sarah.
Kim says, if we are just starting our bookkeeping business, how do we start trying to determine our value pricing when we have no data?
I think I've covered that one, Sarah. And so that was a question from earlier. If you've got no data, then and you're just starting out, you either have to use hourly rates, which is one option, until you've got the data, or it may be that if you're feeling confident, you just remember value pricing is judgment at the end of the day. So it maybe you just go with some gut feel, because I'm guessing you've still got some experience because you've done bookkeeping before in a previous life, in your previous firm. Or the other option is if you decide to do the training with me, either the Bookkeepers Pricing Academy or the How to Price Bookkeeping course, which is included. I said to you earlier that I've already done the analysis for you, and I've got some software that actually calculates the price based on the benchmarking study. So a number of different options for you for a startup. Obviously, if you've been going for a long time, you can use that knowledge and experience that you've got. But there's still options for startups. Sarah, what's next?
Okay, Elizabeth says, how do I handle an existing client on hourly rates who already has a premium service but isn't paying enough?
That's a great question. We might talk about it tomorrow. We're going to focus tomorrow on the communications side, but I've actually got a couple of other things that I know people want me to talk about. And that particular one we might talk about tomorrow, but it is a problem that we tend to have, that I mentioned, I think yesterday, I tend to describe it like this. We're so keen to please and give a great service and deliver value that we sell people the Rolls-Royce car for the price of the Mini or the Skoda or whatever car analogy you want to use. We sell a Rolls-Royce for the price of a Mini. Hope that translates and makes sense. And it is a common problem. And so when that happens, there are a number of options that you've got, but sometimes the best approach is honesty. That's always the best approach. And so you might say to the client something like this. You might say, we've been re-evaluating what we do for our clients, and we've been re-evaluating the way that our pricing structures. And one of the things we've realized is that we now offer clients a choice of different options. And these are our 3 packages. And what we've noticed is that with you, with your firm, we've always given you the very highest level of service, but we've always priced you based on the cheapest option. We have to change the way that we price. And so if you want to continue having exactly the same service as before, this will be the price going forward. Of course, if you prefer to carry on paying the price you've been paying, we can still do that, but it'll be for this set of things that we do. And you let the client choose. The client can choose between paying you more, or they can choose between having less stuff done, or they can have a halfway house because there's then a middle option as well. And you let the client choose. And you'll find that many times, not always, but many times, and people have told me this, is the reaction you get from the client is not what you're expecting. Sometimes we feel we have these objections in our head that if we say this to the client, they're going to go berserk and they're going to shout and scream and so on. Yeah, sometimes they do. If they do, they're probably not the sort of client you want. But very often what people tell me is their clients say, I had a feeling I was getting a good deal. Many clients, the right clients, know they're getting a great deal from you and that you're not charging enough, because most of us aren't charging enough. Not every client, but the right clients will say that very often. And another strategy, there's lots of things you could do with this idea, but the other thing to do anyway, if you are selling a Rolls-Royce service, I would challenge you and say, yes, but what more could you still do? What more could you do? Be creative, because it may be that at the moment you're thinking they're getting the premium service. But what if you could create a premium plus? And then you can use the premium plus to create anchors and explain what more you could possibly do and make your premium a new middle one. There are many things that you can do, but essentially the best thing to do is just be honest with your conversation. And that might well mean sometimes, and this is something with any pricing conversation, repricing conversation, sometimes the client might say, well, that's too expensive, I'm going somewhere else. And that's fine, because one of the things I learned in my accounting firm back in the late 1990s was I thought it was all about trying to win as much business as possible. I went from 0 clients to over 200 clients in 2.5 years. I thought I was successful. But actually the reality is most of those clients were a pain. They didn't appreciate me. They didn't pay enough money. I was crazy busy. And what happened is over the next couple of years, I re-engineered my practice. I almost halved the number of clients, and yet I increased my profits very significantly. And I actually, one of my sessions in one of my academies, I actually go through all the numbers and what I did and how I did that. Most accounting firms have got too many clients, and it's okay to lose some clients. It's okay to lose clients. Think of it this way. Imagine that over the next few months, you increase your prices using all the techniques I teach you. You increase your average price by 20%. And let's imagine that 1 in 5 clients decide to go elsewhere. 20% go elsewhere. We have less clients. If you do the maths and think about it, what actually happens is your top line doesn't change. 20% higher prices with 20% less clients comes out at almost the same number. And that means, and your costs don't change. What ends up happening is you end up making the same money, but you're now working 4 days a week and not 5 days a week. Or you might make more money because you can actually cut your costs. So even if you lose 20% of clients when you put your price up by 20%, you're better off. And so sometimes it's okay to lose clients. It's not that big a deal. It's not that much of a problem. We fear it. We think it's something we should never do. We think that clients are sacred. But the reality is we all have bad clients. And those bad clients are holding you back from building a better firm. Sarah, we've been going for ages, 2 hours and 20 minutes now. Should we do, I'll let you decide, Sarah, but between 1 and 3 questions, 3 max, perhaps 1 or 2, because we've got tomorrow. And I want to make sure that I'm fresh for you tomorrow. I'm going to bring the energy on tomorrow. It's our last session tomorrow, so I want to be at my best tomorrow and fix my technical problems as well. So it's late here in Portugal. So Sarah, I'll let you decide, but 1 or 2 questions.
So a couple of people have said, and I can't remember whether I've asked this and you've answered it, what if you don't know the number of transactions as the client is new to business and doesn't have historical data? Have you answered that?
I have, but not that specific aspect. So, okay, what if the client's a brand new starter? What if the client has just started today and they want you to do the bookkeeping and you don't know what the transactions are because they haven't started or they've only been going for a month or whatever? That's an interesting issue. So the key here is we ask the client how many they think they will get or how many transactions they think they'll have. We ask the client what their expectations are. Okay, so that's the first thing we do that. But then what we do is when we then come up with the price, we want to explain to them this price is based on what you've just said you think will happen. If it turns out that you have less transactions, we have less work to do and we'll charge you a lower price. Is that okay? Yeah, of course it is. But of course, conversely, if we find out that you grow faster than you expect and there's more transactions, we've got more work, we'll have to charge a higher price. So this is what we'll do. We'll agree the price at this level because you've said you think this is the number of transactions, this is what you think you'll be. But what we'll do is we'll agree to meet in 2 months from now, whatever you choose, 2 months, 3 months, and we'll reassess. And if the number of transactions have changed significantly, we may need to change the price. In fact, what we'll do right now, and if you're using the software, this is a really powerful thing you can do. Let me just show you what the price would be if you grow faster and you move from 50 transactions a month to 75 transactions a month. And then you show what the price might be. And then what you've done is you've managed their expectations. And I would even put that in writing. So when you then meet in 3 months' time or 2 months' time, and their business has grown faster than they thought, it's not a big surprise when you say, well, we need to change the price as well. The more uncertainty that you have, we just have to make sure that we manage expectations, and a system like effective pricing makes it really easy to play with numbers and give examples of what the price will be. The better you manage expectations right up front, the easier it becomes to have those, what normally is awkward price conversations. They become much, much easier. So we're doing another question?
We can do one more if you choose. Let's have a look. See if there's one.
Oh, who's going to be the last one?
Okay, so feedback, Natalie, feedback from my current clients is that my biggest value add for them is advisory work. A new client doesn't usually value this because they don't know how much they need it. How do I communicate the value of this kind of intangible support work to a new client so I can price it properly?
Natalie, that's a really interesting question, and one that is advisory work is one of the most powerful things that we could do in our profession right now. It's a huge opportunity for us, which is why I run something called the Business Advisory Masterclass, where I teach you how to package it, how to price it, how to sell it, how to win more clients from advisory. This is something I only do for the Value Pricing Academy. I'm currently halfway through teaching advisory work. We are going to be opening up enrollments for my next 6-month training and for the Value Pricing Academy on how to make money. It's called How to Profit from Business Advisory. Enrollments will open up at the end of October. So I've got no solutions for you right now, but I will give you a bit of an answer. And by the way, someone said to me the other day, they said, I think they emailed Sarah and said, if I join, I really want to join the Value Pricing Academy. Well, you can't, it's closed, I'm afraid, because right now I'm focusing on Academy members and helping them be successful with the advisory course and with using the software. But as I said to them, if you join if you join the Bookkeepers Pricing Academy, what that essentially is you get access to some of the stuff in the Value Pricing Academy, lots of stuff to get you started. And then in 3 months from now, we will open up some registrations, enrollments for the Value Pricing Academy. And you are perfectly welcome to upgrade at that point in time, and you'll get all the business advisory training as well. So that's not an option for right now. I just want to know that 3 months from now, if you want to go there, if advisory is really important, if you want to go to another level of learning, that's the Value Pricing Academy. So to answer the question, how do you help clients see the value? And I teach a whole process which I call the Profit Diagnostic Review Meeting. It's a structured process that's geared towards helping the client see the value. And what we want to do is when we sell advisory services, when we sell advisory, we're not actually selling because we're professionals, we're accountants, we're booking, we hate selling. What we do is we don't sell, we allow people to buy. And we do that by inspiring. We want to inspire people to take the next step, to take action, to buy from us. And we do that by demonstrating. We want to demonstrate that we can make a big difference to their business. And we demonstrate with 3 things. We demonstrate with some ideas. So when you talk to someone about business advisory, you want to give them a few ideas about how you feel they could change the results of their business. We also want to demonstrate with some stories. Now, if you've never done advisory, this is hard the first time because you need some success stories. But once you've got 1 or 2 clients you've helped to improve their profits, grow their business, improve their cash flow, you tell the story. Stories is the most powerful thing that you could do in marketing, to tell stories. Because that demonstrates when you tell the story of how you've helped another business owner get from here to up here, then they think, oh, right, well, you've done this before, you're expert, and I want those results too. And thirdly, and most importantly, we are the experts in numbers. So that means we root everything in numbers. We demonstrate with numbers. You want to show them what's possible in their business if they make some simple changes. And one of the things I teach in my business advisory training is the 9 drivers of profit. There are 9 things that drive profit in a business. Most business owners don't know what they are, but there's a mathematical model that sits behind every single business. And there are these 9 drivers, 9 things that you can change and work on. And what you find is mathematically is if you just change each one by a small percentage, the overall impact can be huge. One of the drivers, by the way, is price. Price is extremely powerful. And if you do my training, I have a piece of software, just like effective pricing, called Profit Diagnostic, where you can play with some numbers in front of the client. And it's a extremely powerful sales tool to get the client saying, wow, can I really get those results? Yes, you can. How do I get those results? Well, you join our business advisory training program. So there's a quick insight. I hope that helps a little bit. Essentially, it's about demonstrating, tell people stories, give some ideas, play with some numbers as to what's possible in their business. And that inspires people. And when they're inspired, they're going to say, tell me more. I want to know how you can help me do that. Okay, Sarah, that was the last question. We've got tomorrow. We've still got time tomorrow. We've done almost 2.5 hours. I hope there's been plenty of things that you're going to take away from that. I hope, most important, you're going to take some action. Are you an action taker or a note taker? What are you going to do as a result of today's session? We're going to close down now. We sometimes leave the Zoom open for 3 or 4 minutes just for Sarah to just finish off the questions. But I'm going to say goodbye for now. Let me know how what you thought in the Facebook group. You can ask some questions there, and I will see you for the final session tomorrow. Bye for now.